Howard College of Business for our students at the University of Houston who are in personal finance. So I am going to open up the Zoom room now. If you're watching on Facebook or YouTube, welcome, welcome, welcome. It is 7 February, Tuesday, March. It's March, 7th of March, year of our Lord, 2023. So the year is already going fast. Okay, I've got the Zoom room up. Now we have spring break coming up next week. So let's see if we can get something started today. We're going to talk about insurance. This is our insurance lesson. So let's go let some folks in and get started. Good morning. Good morning. Welcome to another lecture, another lesson in personal finance. Hope y'all are doing good. If someone could please do a sound check, you can chat in and just let me know you can hear me. That would be great. I would appreciate it. You can hear me. All right. Thanks, Christian. Appreciate it. Cool. So here I am back in my studio. It looks weird. I'm not sure why there's this glowing fuzziness. I'll figure that out later, but it's kind of weird. I think I could figure it out now. Let's see if I can figure it out now. Ecamm Live. Let's do that. Let's do that. Ecamm Live. Man, there's so many little settings on this Mac. FaceTime, detail camera, Logitech. Sorry about that. I'm playing. Let's go ahead and admit everybody. Hope you guys are doing great. I do not like that glowing weird look. Gonna try to fix that. So we have a couple of minutes before we officially get started. If you have any questions or comments, go ahead and leave a message while I try to figure out why I'm glowing in this weird way. I'm gonna see if I can get that fixed real quick. So hey, we have spring break next week, correct? A couple of things I wanted to see if we could clarify. One is that we do have spring break next week, which means the assignment that I posted in Blackboard this morning should not be due next week, but the following week. So if you could do me a favor and check Blackboard, if you'll just check in Blackboard, someone check in Blackboard and let me know that you see the assignment, the insurance assignment. That's what we're going to talk about today. And let me know that's available. 840 base. Yeah, I don't know what to tell you about this glowing weird background. I do have a green screen, which is new from last week, but anyway, so it is, I see it is, Maritza, you said ye? That's Y-E. I think that means yes. Apparently you missed the S, but that's cool. It's on Blackboard, and the due date, can you see the due date? Is the due date correct? It's always a little challenging for me when we have spring break because I post an assignment and then we have a whole week off. So take a look at that due date and just let me know it makes sense to you. If you're watching on Facebook or YouTube and you're taking advantage of our asynchronous course, that means you're watching at 2 in the morning or whatever. Leave a comment, let me know that the assignment is cool. It says it's due on March 21st. So is that correct? March 21st would be, should be 2 Tuesdays. So yeah, it would not be due next week because you'll be on spring break next week, correct? Am I right about that? Isn't spring break next week? It says it's due on March 20th. Let's see, somebody's in the waiting room. So, Christian, is that correct? Don't we have spring break next week? That's what I'm trying to clarify. Yes, we have spring break next week. So that means the assignment that I'm posting this week won't be due next week because you'll be on spring break. And so it will be due the following week. So we'll have a whole week off, which means even though I'm posting the assignment today, you won't actually have the assignment due until a week from next Tuesday. If I have that correct, then that's correct. Okay, spring break is next week. That's what I thought. So I won't see you next week. Now, if you have a question, excuse me, if you have a question, or if you're not getting your questions answered in GroupMe, you're welcome to send me a text message or an email and let me know if you're struggling with something. But this week's assignment is really pretty easy. It's insurance. Sorry if you hear that radio in the background. That's my wife's Park Host radio. It's left on. So anyway, sorry about that. Let's see. Okay, let's get started. It is now 10:06 a.m. We're going to talk about insurance today. And I'm going to help you become a better consumer of insurance. I have to go turn off that radio. Give me just a second. Okay, I'm back. Sorry about that. It was driving me crazy. A lot of radio chatter. I'm in Stephen F. Austin State Park. I'm in my open range RV using Starlink. And so my dog Lucy just joined us. There's more distractions here than my studio at the house or my office at U of H. Sorry about that. Okay, so we're going to talk about insurance today. Insurance is one of the 7 essential elements in personal finance. So if you look at the training for certified financial planners, we have kind of a list of things that we are responsible for when we actually engage in financial planning. So I think I've told you what those are in the past, but let me just repeat them real quick so that you know the 7 essential elements of financial planning. Starts with retirement planning. I call it financial independence. So in my book, Make Your Money Count, I use an acronym. And the acronym is FREE-TIC. 7 words, 7 letters. And I have a picture of a tick with a big ball and chain. It's an ugly drawing. My friend Taylor did it. It's actually kind of cute. But anyway, FREE-TIC. So F is for financial independence. That's retirement planning. It's probably the biggest, most comprehensive element of financial planning, and you're going to engage in that this semester. We will be working on retirement planning. So you'll notice that that's kind of a theme in almost any financial plan is financial independence, or what we call retirement planning. So that's number 1. Number 2 is the R in FREE-TIC is risk management. So that's insurance. And that's what we're going to talk about today. So let me just go through the 7 real quick, and then I'll come back to risk management or insurance, and I'll tell you about it. I'll kind of introduce it to you in the context of financial planning, and then we'll jump into the assignment, your assignment for not next week, because next week's spring break, but we'll jump into your assignment for the following week, which is to update your financial plan with your homeowner's insurance and your auto insurance. So let's go through the 7 elements real quick. You can write these down if you want to kind of memorize the 7 essential elements of financial planning, and your financial plan will deal with most of these. So number 1 is financial independence or retirement planning. I call it financial independence. Number 2 is risk management or insurance. That's the R. The next 2 E's, the first one is estate planning. Everybody's financial plan has to deal with what happens when you die. That's estate planning. How will your assets be disposed of? Who will receive them? If you have no plan, if you have no documents in place, then everything you own when you die, the state will decide where it goes and how it's distributed. So estate planning is an important and one of the 7 essential elements of financial planning. The next E in free TIC, my acronym, the next E is education planning. Now you're a college student and maybe you're paying as you go. Maybe you're working and paying for college. That's how I did college. I paid for college. I did take out some student loans. Mostly I spent those loans on used cars because I was from Michigan, and in Missouri where I went to college there were all these old cars and I could buy them, take them back to Michigan and sell them. So that's what I used my student loan for. And I worked and I made money, and that's how I paid for my college. And my student loan again was kind of investment money. Yeah. So but anyway, somehow you and the people who love you have planned some way for you to pay for college. And there's a lot of ways to fund college or education. And so in terms of financial planning, it's one of the essential elements because education is such an important part of financial success. So we're not going to get into strategies that are available for paying for college, but that is one of the essential elements. It's the second E in free TIC. Now, I don't know, maybe you can guess. What do you think the T in free TIC is for in terms of an essential element of personal finance or financial planning? What do you think the T stands for? I'm going to just see if anybody has a quick response. T, free TIC, remember it's just an acronym to help you remember the 7 essential elements of financial planning. Going once, going twice for 1,000 free points. If you can answer what the T is for in free TIC. These are not real points though. These are 1,000. Time. Orlando, that was a good guess, but you do not get 1,000 points for that. Time is a big part of financial planning, obviously. The time value of money is a huge part of any calculation, but nope, not timing, Aniha. It's tax planning. So one of the most important parts of financial planning is planning how your investments and your types of accounts and all will be handled through taxes. So remember the 3 laws of personal finance. Number 1, the most important law is the law of spending and saving. Spend less than you earn so you can save more for what matters most. It's the most important law of personal finance, but it's also the most disregarded law of personal finance. The second law of personal finance is the law of tax-advantaged investing. The IRS makes the law, and your job, and my job as a financial planner, is to help you take advantage of the law. So that's the second law of personal finance. So tax planning, which is something you're going to be learning a little bit about, is a huge part of personal finance, and it is the T in free TIC. It represents one of the 7 essential elements of personal finance or financial planning is tax planning. How do we make investments and build wealth in a way that's going to cost you the least amount of taxes possible? I call it tax advantaged investing. So that's what the T is. So that's FREET. And what do you think the I stands for in free TIC? If we're listing the 7 essential elements of financial planning, what do you think the I might stand for? Give you another opportunity to quickly earn 1,000 points. These are not real points, but kind of for fun. What do you think the I is for? What type of planning would start with an I? If you're on Facebook, YouTube, yes, Vivian, you got it. You win 1,000 free points. I don't know where you're going to use those points because they're not available in this course, but you just won 1,000 points. So investment management, Vivian. Yes, Christian, you got it too. Sorry, Christian, you got it first, it looks like. They both posted at the same time, but yours came online first, Christian, so you both get. We'll split it. You each get 500 points. Again, I don't know where you're going to use those points, but you earned it. So investment planning, sure. By the way, in this course, the most popular topic is investments. And you're going to be, after this week, in fact, we're going to jump right into investment management, and you're going to be learning about investments. I'm going to teach you some investment strategies that will be very helpful. Sorry, my screen keeps going weird. I'm going to figure that out one day too. So we've got FREETIC. That's free tick. What do you think the C stands for? This one's a little bit more challenging, but I'll just tell you that the C stands for cash flow management. So cash flow is an important part of all financial planning. It's budget. That's what you're going to see when you go into your financial plan and you look a little deeper. And we'll get into that more as we move forward. So let's go back to the R, risk management. Insurance, that's what we're going to talk about today, is insurance. So what I want to do is, first let me just set the table, and I'll tell you a little bit about insurance, and then we'll jump right into the assignment. But insurance is a way to manage risk. Now, there's a lot of ways to manage risk, but insurance is the way that we tend to do it in our culture. We tend to buy insurance so that we can transfer risk to the insurance company. We give them a premium. We give them money. It's called premium. That's what you pay for your insurance in exchange for coverages, insurance protection, insurance coverages. So you are transferring risk to the insurance company. So, quick little story. When I started teaching at U of H, I think I may have told you that I drive a motorcycle. At the time I drove, I think, a Harley Davidson. Now I drive a really cool Goldwing, with a DCT. That's a dual clutch transmission. It's an automatic transmission. It's a super cool bike. It's what the police officers drive. But I mentioned that in the first time I taught class, and one of the students who was from my area, I live in Friendswood, I think he was from Clear Lake, he said, "Did you know, Professor Munchback, did you know that you can drive your motorcycle on the express lane?" I think I was complaining about traffic that morning when I was teaching and how bad traffic was. And he said, "Did you know that you can take the express lane from down in our part of town right to U of H?" I'm like, "And it's free." I'm like, "Yeah, I don't want to spend money." I told him I didn't want to spend money to take the express lane. It's like $6 each way. He's like, no, Professor Munchback, if you're on a motorcycle, that part of town, it's free. And that's like the only part of Houston where it's free. Other people, if you live in Katy and you take the express lane, it's not free. The HOV is free, and you're allowed to take that on a motorcycle. But here's my point. Risk management. If you drive a motorcycle in Houston traffic, it's a little scary, trust me. And so if you're trying to manage risk, like, what's the biggest risk everybody has in their life? It's 100% probability that you will die. The question is, how will you die, when will you die, and how do you manage your life and your activities in such a way that you take care of yourself, you be careful, you be safe, and you don't die tomorrow. That's risk management. So for me, risk management, I've been driving a motorcycle since I was like 13 years old. When I got married, my wife said, "No more motorcycle." I said, okay, as long as we have kids, as long as, we have kids living at home, I will not drive a motorcycle. So I gave up motorcycle driving until our kids grew up and moved away, and then I started driving a Harley Davidson motorcycle, and it's awesome. Now I drive a Goldwing. But how do I manage risk? Driving in Houston is still a pretty potentially fatal activity. Fatal, as in you can die from it. So when this student told me I could take the express lane, it was like, this is going to be great. Because if you've ever been on the express lane, it's one lane. It goes each way. So you're not fighting traffic. There's not people passing you. You're not passing people. It's so much safer, and it's free. So that's just one idea for you to think about in terms of managing risk. So there's a lot of ways to manage risk. If you like to fly an airplane, I don't know if you know this, but if you decide to buy life insurance and you are a pilot, you have my dad and my son, both my dad passed, but my son has an airplane license. He flies a little airplane. And because of that, if he goes to buy life insurance, it's going to be a lot more expensive for him than it would for someone his age who doesn't fly an airplane. So that's something to know about risk management. So just insurance is transferring risk to the insurance company, but managing risk is a much broader topic. There's lots of ways for you to manage risk. And so one of the ways that you can manage risk is just your driving habits. If you like to drive fast, and I like to drive fast, you have more risk. So let's talk about types of not types of life insurance, but types of insurance. So look at that. I think I'm having a slow connection. It looks like maybe Starlink is. Are you guys seeing my screen okay? Do you see the house with the piggy bank now? Can just chime in if you could. Just tell me what your experience is like so far. This is, you can see it, Vivian. It's blutty. What's fuzzy? It looks fuzzy, blurry. Okay, blurry. It does look blurry. Yeah, it looks blurry to me too. I don't know why. It's not blurry on my iPad, but we'll just pretend that it's that, bokeh look. It's just a house. But you're probably not seeing the words either. Well, this is posted. What you're looking at, just so you know, this content is posted in your money study group. So when you go to Blackboard, you're going to see your assignment, and it's got the same instructions, just doesn't have the nice pictures, and you're going to want the pictures. So little word of advice for those of you who are kind enough and responsible enough to watch the lecture on Zoom or listen to it, whether you watch it on YouTube or you're here with me now, this is important. The content that you have in Money Study Group is just, there's a lot more there. So it will help you with your assignment if you go there, and that's what it's there for, is for you to have more resources to help you more quickly complete your assignment and achieve higher points. So please do that. Obviously, if you go to Blackboard, all the instructions are there, but I'm going to show you some pictures that might be helpful, and we'll talk about it. So I'm really blurry now. You probably don't mind me being blurry. I don't know why. I'm going to have to figure that out pretty quick, though. I probably won't figure it out today. It's a little distracting, though. I look like a ghost. So you can hear me. I'll just keep talking. So last week, well, it wasn't last week. Last week was bargaining. The week before, you did the Credit Crush assignment, which included you putting, you purchased a car, you purchased a house, you put on some debt with credit cards. Well, this week, your assignment is going to be to add insurance to your financial plan. So I want to show you how to do that real quick. One of the things you're going to do is you're going to get a quote for car insurance. So if you already have car insurance, let me just say the best way for you to get a quote is to go to your existing insurance company and get a quote. Just ask them to give you a quote for some different coverages. Now you're going to do some research this week and you're going to learn about the different coverages. You're going to just read and learn about the different coverages. So for example, in your auto insurance, you're going to learn a little bit about liability coverages and what those numbers mean on your policy. My policy has 100/250/100. That's the liability coverage on my auto insurance. And your policy will have the same thing, but you may have different numbers on your policy. And so when you get your quote, I want you to see what it would cost you to move that coverage to the next level, whatever that next level is for you. So that's liability. That every car insurance, auto insurance policy has liability. It's a very important coverage. It also has uninsured and underinsured coverage. I want you to just be familiar with what you have and identify the coverages that you have on your current policy, and then get a quote from your insurance carrier for different coverages. Now, if you don't have car insurance at all, if you're not a driver, if you don't have a license, then you're going to have to work with somebody. You're going to have to kind of fake it. You're going to have to just get a car insurance quote and do your best to get a quote and compare coverages. So anyone can get a car insurance quote. You might work with your roommate or a friend or a family member who has car insurance and get a quote with them from their insurance company. But most of you are driving, and so you're on, probably some of you are on your parents' policy, and that's the best way to do this. Here's why. If you go out and just start shopping for insurance, you're basically putting your email out there and you're going to get solicited by a whole lot of companies for insurance from now until next semester. It's kind of annoying. But if you go to your insurance company and you get a quote from them, that's typically just so much easier, it's better, and you'll learn something along the way. That's the whole point of this assignment, is to learn about the coverages that you have, because as a consumer of insurance, you're going to spend a lot of money on insurance in your life. And in this one session, it's impossible for me to teach you everything you need to know to become a good consumer of insurance. I can't do that in one lecture, in 1 week. But what we can do is we can take some time and look through the coverages that you have on your car, and you can learn from this experience so that you become just a much more savvy consumer of insurance. So hopefully you'll have questions, you'll learn some things as you go through your coverages, and those things that you learn about the coverages in your car insurance policy are going to help you just basically understand insurance. So when you get the quote, I'm going to look at, I'm going to just go down this page, and you're probably not going to see it so well on the screen, but just know that this same article is posted in your money study group and in Blackboard as well. So it starts with collision, and it looks like I say in this article that you'll get 5 extra points if you get a quote for more than one deductible. So here's what I'm talking about. When you get your quote, your insurance quote, one of the things you're going to see is that you have a deductible. Now, do you know what happens if you take a higher deductible? What happens if you take a higher deductible on your car insurance? Can anybody answer that question? Do you know what a deductible is? Do you guys know what a deductible is? I guess I assume that everybody knows what a deductible is, but the truth is probably not everyone listening actually knows what a deductible is in an insurance policy. So I'm looking for some comments, some chat. I'm not seeing any chats for what is a deductible. And I know that's something that, how do you say it? What is a deductible? How does it work? What does it mean? How does it impact the premium that you pay? So I'm not seeing a ton of you actually post any comments, so let me give you a minute to just answer the question. If you're watching on Facebook or YouTube, please do this. This will be, well, this could be one of your class collaboration screenshots. So going once, going twice, going, gone. That tells me, thank you, Maritza. It's a deductible. What you pay for out of your, what you pay for out of your insurance. So that's right. So if you get in a car accident and you have a $250 deductible on your collision coverage, that means you pay the first $250 out of your pocket. That's your deductible. And so if you have a $250 deductible, let's say that your vehicle is totaled. Let's say I drive a Lexus ES350, it's a 2008, but let's pretend it's a 2020. If it's a 2020, it's going to cost about $30,000 to replace it, maybe $35,000. So if I get in an accident, a collision, you guys know what a collision is, right? That's when you run into something. That's a specific coverage on your car insurance policy. And if you get in an accident with your car, you collide, you wreck your car and it's totaled, and you have a $250 deductible, that means the insurance company is going to pay to repair your car, but you're going to pay the first $250. Now, if you did have a Lexus ES350 2020 model that costs $35,000 or $40,000, whatever it is, if you did actually have a $250 deductible, what you pay for that insurance, especially as a younger person, especially if you're a guy, that premium is going to be really high. Think about that for a minute. So in this example, you crash your car. That's called a collision. And that means your insurance policy, the collision coverage is going to kick in. But you have a deductible. You chose a $250 deductible because you didn't want to have to reach in your pocket and pull out a lot of money to pay if you wrecked your car. So what does that mean in terms of the cost of your insurance, your premium? Now, maybe you don't realize this, but a $250 deductible on a 2020 Lexus ES350 is a super small deductible. And if I was your insurance agent, which I'm not an insurance agent anymore, but for many years I was a State Farm agent, so I would advise you, especially if you were a younger person, especially if you were a younger guy, I would advise you that deductible is way too low. First, though, I would ask you a few questions about, how much money do you keep in your checking account? Do you have an emergency fund? Because if you don't have an emergency fund and you don't keep any money in your checking account, and I give you the kind of deductible that would make sense in terms of the cost of your insurance, because remember, when you raise your deductible, you lower the premium, and that's kind of the game. You want to figure out what's the lowest premium you can get and have good coverages and deductibles that don't kill you. So while you're thinking about that in this scenario with the collision with your Lexus vehicle, just remember that when we learn about deductibles, it applies to your home as well as your car. So I'm going to tell you a little quick story on the side here. My homeowner's insurance in Friendswood, my house in Friendswood, the homeowner's insurance company went out of business. January 8th of this year, I got a notice that my insurance company was going bankrupt. They're out of business. Lovely. So yeah, I was a State Farm agent for many years. State Farm is probably the best insurance carrier for homeowners insurance. And you may wonder, why didn't I keep State Farm insurance? Well, I also knew that as good as State Farm was, they were the most expensive, at least in the Houston area, and so I wanted to save money. And so I switched. I went shopping. I got a broker who all they do is they shop around and they get you lower price. I knew that if I ever had a claim, so one of the reasons State Farm insurance is so good is because they have a great claims department. They pay claims better than most companies. I can tell you that. I'm going to say it's my personal opinion because I don't want to, I want to be as honest as possible, but it is my personal opinion. Having not only been a State Farm agent, but more importantly, having been an independent insurance adjuster for many, many years around the country, I can tell you that some companies are notorious for not paying claims, and some companies, like State Farm, are notorious for being very good at paying what they owe under their policy. But again, you pay a higher price for some companies, but they don't go out of business. And that's what happened. I got a cheap insurance company. They went out of business. So then I had to get insurance through the state. So I live in Galveston County. I got insurance through TWIA, Texas Windstorm Insurance Association. And I'm telling you this story because two days or a week after, literally 2 weeks after I got insurance through the state, through TWIA, a windstorm hit my house and blew some shingles off. Now here's the problem. When I got that insurance through the state, I got option 4, which is 2%, no, a 4%. It's a huge deductible, okay? It's a percentage of coverage A, and it was so high. My deductible was so high because I wanted to keep my insurance rate really low. So I took a high deductible. And then I had a claim, and they came out and said, yes, you do have damage, and yes, we will pay for you to replace your roof. However, they said, do you know how much your deductible is? And I'm like, yeah, it's pretty high. And so they gave me an estimate, and they said, we're going to pay to replace your roof, but after we apply your deductible, you get no money. And here's the kicker. Even though we didn't give you any money, if you want to keep your insurance policy with us, you have to replace your roof. Because now that we've inspected it and we identified damage, we're not going to keep insuring you if you don't get your roof replaced. So I have to reach into my pocket, and it's going to be like 20 grand to get a new roof. And I'm getting nothing from my insurance company. The good news is I saved a couple $1,000s because I got a lower premium because I took a high deductible. And that story is just to help you understand how a deductible affects you. And you have to make sure that your deductibles are not so high that even though you're saving money on insurance, when you need to use your insurance, you have to have a surplus, an emergency fund, so that you have money to make repairs if you have a large deductible. So I still would suggest, and that's why you're going to get a quote for your car insurance this week, and I'm going to give you extra points if you give me a quote with multiple options for your deductible, because I want you to know the difference for the cost of your insurance if you have a $250 deductible versus a $1,000 deductible. If you're driving a 2022 Lexus ES350 that's worth 35-40 grand and you're paying insurance, especially if you're a young person, especially if you're a young man, you're going to be paying a lot of money if you have a $250 deductible. Now, I've said a couple of times, if you're a young person, especially if you're a young man, you're going to pay a lot more insurance. Does anybody know why it's true that a young person, especially a young man, is going to pay a lot more insurance than someone my age? Anybody know why that's true? Specifically why a young man will pay more for insurance, car insurance, than a young woman. they're seen as being higher risk for accidents. That's true. Christian, why is that true, though? It's true, they are. That's why they charge a higher premium for young men, young guys. They charge more than they do for young women because they're a higher risk for accident. But why? I'm guessing the stereotype of guys being reckless. Yeah, no, the stereotype isn't the reason. There's a reason that they get stereotyped. They do things that actually result in more accidents, but not just more accidents, more fatalities, more damage to vehicles. And there's a reason, a very specific reason why guys have that stereotype. And it's not a stereotype, it's a very statistically sound reason that young men cost more, not just because society looks down on young men. It's not that, it's a statistic. So anybody got a guess? So I don't know, maybe you're different than I was when I was young. I know there's so many differences that have happened over 100 years since I was young. Testosterone. Orlando says testosterone. You know, that could be part of it. Men, young guys, tend to statistically drive faster than young women. If you drive faster, especially if you throw in a little alcohol, a little marijuana, a little whatever, speed kills. And young guys like to drive their cars fast. That's the truth. Now, again, maybe that's changed in the last 5 minutes. A lot has changed. I mean, you can think about just the whole idea of gender. When I was your age, it was pretty clear, pretty simple, pretty obvious. Today, it's not. And so I hope you're not confused, but truthfully, the statistics for guys driving vehicles tends to be pretty clear that guys drive faster, and faster speeds produce worse wrecks and more fatalities. And because of that, your insurance costs more. And that's one reason why you would want to look at a higher deductible, because think about it. If your frequency for claims or accidents was higher, one of the ways you could get your premium to be lower is to have a higher deductible, which means if you get in an accident, you're going to pay more out of your pocket. So the bottom line is, if you learn to drive more carefully, then that's called risk management, and it's going to save you money, not just in terms of not having to pay your deductible, but over time, if you don't have accidents, your insurance rate is going to go down, down, down. On the other hand, if you have multiple accidents, over time, your insurance is going to go up, up, up a lot. And so the deductible is a good incentive for you to save some money on your insurance, but also for you to practice driving more safely, more responsibly. So that's the deductible. So I'm incentivizing you to look at your policy and get a quote and see what the difference is for a lower deductible and a higher deductible. And we're talking now about collision coverage on your car insurance. So let me talk a little bit about, there's lots of coverages on your auto policy. And I'm going to talk about these. There goes my screen getting really weird, but hopefully it'll come into focus here in a minute, and I will get these numbers in front of you. So I want you to see these liability numbers. There are 3 numbers for liability, and what I'm showing you on my screen is 100, 500, 100. That's pretty much what I would recommend for most people when I was a State Farm agent. Now that, when you look at your policy, you may see that those numbers are super high. 100, 500, 100. Maybe it's 100, 250, 50. But what do those numbers mean? You're going to learn that this week as you study about insurance. But I'll just tell you what they mean so that you know, because you're going to see these on your insurance policy. So the first 100, these are liability coverages. Okay, these coverages are part of Section 2 of your car insurance policy. which means those coverages under Section 2, liability, they apply for the other person. So if you get in an accident, this is the protection you're providing for the other person, the people who had either bodily injuries or property damage, okay? Just know that your policy, whether it's auto or home, has two sections. One is first party. That's when we talk about collision and comprehensive and rental. Those are coverages that protect you. But Section 2, liability, that section is all about the other person. And for those coverages to come into play, you have to be negligent. You have to be at fault. You have to be legally liable, okay? That's why it's called liability. So you need to understand that. Liability is for the other person when you are legally liable to pay for damages that you caused. So that's what these three numbers are. 100, 500, 100 means that if I get in an accident in my Lexus and I cause the accident, these are the coverages that will apply. So 100, 500, 100. Here we go. This is what it means. Let's assume in my accident that I get in an accident, it's my fault, I'm on my phone, I'm texting away, you've seen that happen, right? Texting away while I'm driving, and I get in an accident, I'm driving through a school zone, and I get in an accident with a school bus that's loading children, and it's my fault. Wow, that would be a bad accident. So let's say that I caused the school bus to swerve, it rolls, and a couple of kids actually end up at the hospital in the emergency room. So now let's unpack the scenario. It's my fault. Forget the fact that my car is damaged and I have a deductible and I'm filing a claim to replace my car. That's going to happen because I had a collision, so that's covered. But liability is what covers the kids on the school bus and the school bus driver. And so 100, 500, 100, what does that mean? So the first 100 is bodily injury for one person. The second number, the 500, is personal liability, bodily injury for everyone in the whole claim. So in this example, I said three kids went to the emergency room. The driver of the school bus, he had some neck problems, and when the bus rolled, he was hurting pretty bad. So he had a claim, but three little kids that went to emergency room, one of them actually died in this example. So what does that $500,000 do? Well, first of all, the $100,000 is the most that will be paid for any one person. So the child who died, they're going to receive from my policy $100,000 because that's the most that my policy will pay for any one person. $500,000 is the total, though. So then the next two kids who are in the emergency room, whatever their medical bills are, my policy is going to pay those up to $100,000 for each one of them. No more than $100,000 because that's what the first number is for. But overall, the whole claim for bodily injury is $500,000. So let's say there were 20 kids on the bus and they all went to the hospital and they all needed $50,000 worth of medical bills. My policy would pay for 10 of those, only $500,000. The other 10 would not be covered. Or basically what would happen is, even though all 20 kids had $50,000 worth of medical bills, my policy would only pay half of those medical bills because 20 kids times 25,000 is going to be $500,000 if I did my math right. So just so you know, those are what those first two numbers stand for. Bodily injury for one person, bodily injury for everyone involved in the claim. The aggregate is what that is. And the third number, does anybody know what the third number is? You want to take a guess? You got 100, 500, 100. What is the 100 for? Anybody know? $100,000 on my policy is for going once, going twice. Okay, here we go. It is property damage. So again, in this scenario, I get in an accident, going through a school zone, texting on my phone, I cause a collision with a school bus, it rolls. When it rolls into a light post. The light post breaks and it falls onto a really nice house, and inside the house is a really nice furniture. The window breaks, glass goes everywhere, so that it goes on and on, right? I'm making this up as I go to illustrate what's covered with that property damage. $100,000. How do you think the school bus is going to cost that rolled? I'll give you a clue, a little hint. This school bus happens to be one of Vice President Kamala Harris's favorite vehicles on the planet, which means what kind of school bus would this school bus be? Going once, going twice. You got it. Nobody actually got it. I'm just going to pretend you got it, because if you're watching on Facebook or YouTube, I'm sure you got it. The school bus is Kamala Harris's favorite kind of vehicle. It's an electric school bus. Yes, it's a very nice electric school bus, which is going to cost 5 or 10 times more than a diesel or gasoline school bus. And how much coverage do I have on my policy? 100, 500, 100. That last number, the 100, that's $100,000 for property. So that means not my car's covered under collision, but the school bus, the light post, the house that got damaged when the light post fell on the house. All of that is property damage, and my accident created lots of damage. The school bus, the light post, which are very, very expensive to replace, and the damage to the house when the light post fell. So those are all property damage. The bills come in and my insurance company pays those bills, but when they get to $100,000 they stop. And then what happens? This is important whether we're talking about auto insurance, home insurance, or no insurance. What happens if you are legally liable for damage that you cause and you run out of insurance, or you have insurance that's insufficient, it's too low? What happens? I'm going to give you guys a minute to answer that, because I just need to know you're actually, you pay out of pocket. Thank you guys. Ania and Giselle, you pay out of pocket. And that's what happens in this scenario with the school bus. If in fact most people wouldn't have 100, 500, 100, okay? When you check your policy, I bet you're going to see something more like 130, 15, something like. I can't even remember what the minimums are, but the state of Texas has minimums that you have to carry. And most people buy the minimum. Why do you think they buy the minimum? You know the answer to that. The same reason I bought the big deductible on my TWIA, my windstorm insurance, because I wanted to save money. And then when the accident happens, now I'm paying out of pocket. The same thing happens when you carry coverages that are too low. If you're driving, people would always ask me when I was a State Farm agent, how much coverage should I have on my car? And I would always just say, you know what? If you can tell me what kind of accident you're going to be in, I'll tell you exactly what kind of coverage to buy because you never know. But if you're driving in Houston, the likelihood of having an accident is much higher than if you're driving in Bowling Green, Kentucky, I think. Okay, so lower premiums. I forgot what question I asked, but that's the answer. A lower rate, lower premiums. Oh yeah, that's why people take the minimum coverage, because they want cheap insurance. And then when they get in an accident, especially when it comes to accidents that they're liable for, and they have the minimum insurance, who ends up paying? They don't have any money. You can sue them, but they don't have any money. Could be you. Maybe you took the low insurance and you get in the accident and they sue you. Now, here's an important part of this whole conversation about liability insurance. So let's assume that you bought the cheap insurance, because you wanted to save money, and then you got in the accident I just described or something like it, and now they're trying to get you to pay, but you don't have any money. So they can sue you, right? But are they going to get any money from you? They will from me because I have assets. They will have they'll be able to sue me and get my stuff. I'll have to sell my RV. I'll have to sell maybe not my house. I think that's protected by homestead. But I've got 2 RVs right now, trying to sell one. I've got a nice motorcycle, some cars. I've got money in the bank, lots of investments. And if this scenario was me and they sued me, it would be very easy for them to get all my money if somebody died because of my accident. But you don't have any. So let's assume you don't have anything for them to sue you for, but you have something very, very valuable, and this is important. I want you to know this before we end today. What you have is your future income. And if you get sued for an accident that's your fault, and you don't have the money and you don't have the insurance, they can garnish your wages for the rest of your life. They being the plaintiff, the person who's injured, who has a loss, the person who lost a family member because of your negligence. So carrying sufficient insurance is pretty important. I don't mean to scare you. I just want you to understand risk management and transferring that risk to the insurance company. It's a big part of personal finance, especially as you build wealth over time. You want to protect those assets that you own, and one of the ways you do that is through insurance. So that's an important part. Okay, there's lots of coverages here on your auto insurance, and I hope you will spend some time and learn how to do that. I put this really cool picture in here. It's a GIF file. Isn't that cool? It didn't work in the post. I made it the featured image of the post, but it didn't work. But it's working here, so enjoy that for a moment with me, will you? I always like moving pictures. Okay, I want to show you now. This is kind of important. Before we end today, I'm going to spend a couple of minutes and let my slow connection develop a stable image. And I want you to see this data card. So this is your car insurance data card. You might want to open your financial plan at Wright Capital Bayrock. This is where you're going to need to grab a screenshot. That's not real clear, is it? It's kind of fuzzy. So again, hopefully you can go to Money Study Group and open this right now if you want while I'm talking. So if you're on Facebook or YouTube, just jump on over into your Money Study Group portal. Go to, I think it's Chapter 8, Lesson 8, Insurance, the Insurance Assignment. I think maybe it's Insurance Assignment Review. If you zoom in, we can see it better. Let me see if I zoom in, if you can see it. So I'm zooming in, but this connection seems so slow. Okay, I zoomed in. Let's see if that... Yeah, that helped, maybe. Yeah, that's what I'll do. I'll make just the data card. So give it a second here while I talk. It'll get a little more clear. But you have this data card. Is that a little better, Aniha? I'm going to work on this. I'm using Ecamm Live with Zoom, and it's worked really well, but I'm having all kinds of issues. I got a new camera this week. I think the new camera is creating a problem, but I'm sorry for all this fuzzy stuff. I'll get that fixed. But this is your data card. You have one of these in your financial plan, but what you don't have in your financial plan, something that you will have in 2 weeks when I grade your assignment, is a data card for the insurance coverage for your 2 assets, your car and your home. So this is the data card for your home. I just want you to notice there's some key things here. You notice, first of all, collision and comprehensive are both checked because you need to have collision and comprehensive coverage. Those are 2 coverages on your car insurance policy, and your financial plan wants to know that you've checked those off. And I will give you a deduction if you don't have those checked off. So then you're going to, after you do your quote and determine what kind of bodily injury protection you're going to have, those numbers will go into the data card. Property damage, notice you see bodily injury per person, that's what the PP stands for. And then bodily injury per accident, that's what the PA, that's the second number. And then the third number is property damage over there on the right. In this case, it's $25,000. You've got a deductible. You're going to have to get that quote to figure out what deductible makes sense for you, and then go ahead and plug that in. Name the car, who's the owner, when does your policy end. All of those are just pieces of data in the data card for your car insurance. Notice I said premium inflation of 5% a year. That's probably more than it will go up. And if you're young and you drive safely, it could actually go down. It will go down. So, okay, let me jump into the homeowners. I'm going to pull up the homeowners data card now. This one doesn't have near as much information in it, but it's still part of your... Now, I didn't include a data card for the mortgage, but the mortgage and the insurance work together. So on your mortgage data card, that's where you plug in how much you're going to pay for insurance. In this case, this student had $7,500 for the annual premium, but they have a $700,000 house, so that's probably pretty close. Included in plan, yes. Link to primary home. So again, take a look at your mortgage data card, make sure that one's set up correctly, and then set up your homeowner's insurance card. And it's pretty self-explanatory. You're going to probably need to do a little research to figure out how much is the insurance going to cost for your homeowner's policy. Okay, so I am going to give you guys, I'm frozen. Vivian, am I still frozen? Can you still hear me? I'm not frozen. Sorry about that. It's a cloudy day here in San Felipe. I'm at the Stephen F. Austin State Park. This morning I had a speed test of over 200, but whenever it gets overcast, that becomes really sketchy. So I apologize. Thank you guys for your patience. So I'm done. If you have any questions, I'm happy to answer the questions you might have. And again, next week is spring break, so we will not have the Zoom meeting next week, and your assignment in Blackboard will be due in 2 weeks. If you have questions or you get stuck, feel free to reach out. Otherwise, I will be here after spring break, and I'll get my camera issue fixed. I'll do my best to get it fixed. In the meantime, if you're watching on Facebook or YouTube, thanks for watching. Leave a comment. Make sure you interact a little bit. Grab a screenshot for whatever you post, and you can use that as your class collaboration this week. How early for submission for extra points? That's a good question, Orlando. I'm glad you asked that question, because honestly, I haven't thought about it. It's a good question. So typically, you have to turn it in by Friday at 3 p.m. when the market closes. But that means, okay, now I'm going to make a decision, and I'm going to say that you get the extra points if you turn it in a week from this Friday. So if you turn it in Friday before the Tuesday that it's due, I'll give you the extra points. That gives you all of this week. You don't have to do anything, and if you turn it in this week, obviously you'll get the extra points. Otherwise, you'll turn it in by Friday at 3 p.m. next week, and you'll be good to go. Thank you. You guys have a great spring break. Be safe. Do something fun. And be kind to everybody, including dogs and cats and birds and lizards. And yeah, we have a lot of birds and lizards and snakes in our park. We're always nice to them. So anyway, you guys take care. For resubmission of assignments, you said we should state in the comments that a resubmission, and yeah, that's so helpful, because otherwise we're going to be sending emails back and forth. So for example, if you turn your assignment in early and I kick it back to you and say, hey, you missed something, fix it, well, then you fix it and you resubmit it. You may resubmit it on time. You have to resubmit it on time by the due date. But if you don't tell me that you already submitted it early, then when I grade it, I'm only going to give you the 50 points maximum. But if you leave a little comment in the little text box and say, hey, I turned this in early, you kicked it back, and I'm making corrections and resubmitting it, just let me know this is a resubmission. It was early. Just let me know that. And then when I'm looking at your assignment, grading it, I'll give you the 60 points instead of the 50 points. But if you don't remind me, then you're going to have to send me an email, and that's just going to be extra work for you and me. I'll still do it if you send me an email, but I'd rather you help me out and do that question, Maritza. And thank you for answering it, Giselle. You guys have a great day. I'm here if you have another question. I'm going to go jump over to the broadcast, and I'm going to finish the broadcast. I'm going to end the broadcast.